Today, is there still a property front line? Hello again, it's Martin North from Digital Finance Analytics. Welcome to the latest post covering finance and property news with a distinctively Australian flavour. And I'm joined by Chris Bates. Hi, Chris.
Hi, Martin.
Hello.
Is there still a property front line? I did pick up on that.
Well, you know, we've always said from the property front line. So the point is, you are right there. What are you seeing? It must be very interesting at the moment.
Well, is there a front line anymore? I mean, after last night, is there, or is it all behind the scenes now? And that's a big game changer, really. I mean, if you can't do an auction, can you do a boardroom auction? Well, no, probably not. The whole process of selling property is smokes and mirrors. And if they kind of get taken away, or private viewings, the whole sale of real estate is going to change, really. For how long? Well, we don't know yet.
Well, of course, and particularly in Sydney and Melbourne, where most of the auctions are happening, that's going to be a big impact, isn't it? Particularly perhaps in the upper end of the market, where perhaps auctions will be more prevalent, perhaps less so down at the bottom end. But the whole idea of having crowds of people being shown around houses and all of the process around buying a house, pretty much, I would suggest, is going to stall pretty much now.
Yeah, I mean, you don't. A lot of properties, the way that you maximise your price is that kind of creating that competition and the herd mentality by, social proof of auctions and things like that. So, if you haven't got that environment, you wouldn't want to sell your property, basically. So, and even now, you wouldn't want to sell your property if people don't even want to come and leave their house to go and look at it. So, that's going to completely dry up supply for people who are even thinking about upgrading or selling to buy something else. Like, it's just going to be off the table, because they can't even do business.
Yeah, and I suppose the other point there is the banks are bending themselves over backwards, right, to keep people, and the mortgage relatively okay, because they don't want us to foreclose. They don't want a lot of forced sales, particularly as this window, however long it be, might be quite short.
Yeah, I think it was really interesting what happened on Thursday and Friday. Obviously, we always knew the rates were going to get cut, but we didn't know how the banks would respond to that. And obviously, it's not meant to be that they're all colluding behind the scenes, but, I do think the government was in their ear and basically saying, look, we'll give you cheap funding for 3 years. You've got this kind of line available. We can't really give any more than that, but you need to pass it on to customers, and we need to come up with additional ideas to support, people through this downturn so they don't have to sell their home. And that's where these kind of payment holidays have kind of come out. I mean, what you need to do to get the payment holiday is still a little bit of a up in the air, but some banks are just saying they'll just give it to you if you ask for it. Some are saying they're going to potentially do some due diligence, but the sheer volume of customers, they can't do too much due diligence. So, and to have 6 months without any repayments is pretty crazy. And if not, then you can go to 2.29 for 3 years or 123. So you can see that the banks are doing absolutely everything they can to avoid sort of people having to sell.
And of course, the point there is if you're not making any repayments, the interest is continuing to tick up. And essentially, the repayment process then will be slightly higher or slightly extended later. But at least it gets people through the loop. And of course, APRA has also given the banks ability to be able to skirt around responsible lending with ASIC and also the other metrics that they were forced to report on. A bit of flexibility there too. So everybody is trying to keep the property bubble at least where it is.
Yeah, I mean, the thing is, for prices to really fall, you need supply to start to proliferate on the market. And so what they're trying to do is, just shutting down the real estate industry will stop supply. That's, people can't even have that as an option to sell because they go, well, we have to stay because we can't really sell it. And then doing everything you can to support them with their mortgage and is really going to stop that kind of defaults happening. And, technically there probably are defaults, if that's why the payment holiday is stopping them going to arrears. But let's say you don't do any repayments for 6 months, you still might have 28 years left on your mortgage. So I could potentially save, $5-6 grand a month for the next 6 months to cover the bills. And then I've got to pay that $30,000 off over the next 28 years, which is an extra, $100 a month or something, let's say. So, but I mean, it's whether they do another 6 months after that, and do they if things are still, continuing. So it's definitely a bit of a game changer to support the market. I didn't think that would even be possible, but that's the thing, isn't it? Like when things get tough, things that you don't expect are happening, and like kind of QE and infinity over in the US.
Yeah, well, everybody's sort of jumping over themselves to try and put more liquidity into the system and support the banking system. I've actually got a greater confidence now than I had a month ago that the banking system is still going to be with us, simply because of the amount of stuff that's being thrown their way. And they can, of course, then pass some of that on too. But there still are some risk segments, aren't there? I guess perhaps some of the investment areas is a thing to think about. What happens if a tenant loses their jobs, for example, for investment property?
Yeah, I was just chatting to a client about this morning. They've got an apartment and they've been trying to sell it. It's an apartment in Bondi. They're probably going to get 1.3, 1.4 for it. But they're lucky to get 1.1 for it. And they were meant to go to auction this weekend, and they've had to bring the auction forward to tonight. In their situation, it just doesn't make sense to sell it, because you're talking such a big drop already baked in because of this kind of peak fear. And one of their fears is, well, what happens if I get we're getting a tenant and things like that. And for them, I'm not that bothered about getting a tenant. There's still people out there that, want to move houses, who have got jobs, who, need to rent. The people you've got to be worried about is the investors who have got tenants on, leases. And if they lose their job, can you kick them out if they don't start paying their rent? And it's going to be a very interesting one, because it's obviously an ethical issue. You can't really kick someone out who's already struggling to live. And that's where an investor can't get the cash flow. So if you haven't got enough income coming in to support your mortgage, and do they do payment holidays on investments for investors on big end? They might do it for homeowners, but do they do payment holidays for investors? There's probably not that. They're not that bothered about the investors as much as the homeowners. So you could start to see, if we do have a bit of a real spike in unemployment, we do see a lot of people lose their jobs, a lot of people can't afford to pay their rents, a lot of investors may come under stress. And the problem is a lot of investors are in areas where there's lots of other investors. So in areas like high-rise apartments, where maybe 80, 90% of the apartments are investors, those is one area I think you've got to be very careful owning at the moment, because if you do start to see this rise of tenants kind of not affording to pay.
Yeah, interesting. And I noticed there's been a bit of a change in the weather with regard to Airbnbs, because that was quite popular. Quite a few people are actually doing that as part of their investment return strategy. Doesn't seem to be working now, though.
Yeah, I mean, that's another area. So you think about, the holiday holiday letting sort of investments that were, the only way it really made sense was to do Airbnb. And if that's not happening anymore, can you afford those, that house on the beach down the coast, etc.? So I think those areas potentially could get smashed if there's a real recession, basically, not only traveling from overseas, but internal statewide travel. And a lot of those areas are also where retirees go. And if a lot of their income is smashed because, it's in the equity markets, and then they've seen 30, 40% declines in their super balance, those areas might find a bit of stress as well, because they haven't got enough income to support their lifestyle. And so then they might want to sell their home. So I think the tourist sort of areas outside the city could be in for a bit of a smashing, which is what happened in the GFC. Places like Noosa fell 50% because a lot of the retirees, their super funds halved.
Yeah, very interesting. And you mentioned the overseas thing. I was talking to somebody the other day who's in the education sector, and his theory is that international education is going to disappear, and not just immediately, but long term. Now, of course, a lot of people have actually been using, students as effectively a source of tenants. That potentially turned off now may not actually get turned back on again.
Yeah, 100%. A lot of these high-rise apartments, what's filling them is they're around universities, and so they're that kind of influx every year of lots of students that want to live around the university because they don't know where else to live. If they stop coming and you only got locals who are going to the university, they don't really care about living near the university. And so I think we'll see a lot of apartments not being able to rent out because that demand from the overseas students aren't there. So I do think that's together with all the other rental problems. So I think that's been a bit of a flawed strategy where a lot of your demand is from one segment that's potentially going to go. I do think the top end's going to get hit. It always does when recessions come. I look back a lot of the clients who have bought, the 3 million plus over the last couple of years, and I've had a lot of conversations with them in the last 2 weeks, and they've had to make huge decisions in their businesses and cutting back staff, etc. And their risk appetites, completely gone from, doing really well to taking a lot of, risk off the table. So I do think the top end's going to get hit really hard as well if this recession kind of keeps going, basically.
Yeah. And of course, nobody knows how deep it will be, how long it will be. Some people are now saying a 20% fall in property prices, a 15% unemployment rate. I mean, these are recession, depression type numbers. So we'll see. One of the things I've noticed in my surveys is that some older households, and perhaps those around retirement and those into retirement, they're sitting on really big mortgages, and they've been servicing those mortgages from returns off the stock markets. I think that's going to be a really worrisome area now, because essentially they don't get much on term deposits. They're not getting much returns from stocks and of course the capital value's gone down. So I'm not sure what they're going to do with those mortgages that they're still sitting on.
Yeah, it's interesting. A lot of that kind of pre-retiree market, because rates were very low on the mortgage, and the house price was going up. There's this kind of artificial feeling that I'm wealthy because I've got $1 million or $1.5 million equity in my home. The problem is that their plan was always that they'll get to retirement, then cash in their super fund, and then pay out the mortgage. But if your super fund's now 30-40% lower, and even though you got low rate on your home loan, you don't feel as comfortable now, right? So I do think that's a bit of a worrying situation. And then they consider, do I downsize rather than paying off my home loan? Because I need to downsize to release that cash to top up my retirement income. So you can see how like a share market fall can lead into a property market, sort of people selling and then having to kind of on sell. So I am worried about that sort of segment as well. I do think that there's the new house and land package area. I mean, new house and land packages probably won't be able to sell because, that does need that real confidence in the market for, a lot of first home buyers who are buying those to be kind of frustrated and confident to enter and build a house. So I do think their sales will completely drop off. But also they're at the areas where, their LVRs and their mortgages are generally a lot higher. So they've got mortgages that, taking that 10% deposit and things like that. And potentially they're young families as well who might only have one income because they might be having one child. And so they might not be able to get a second income because there might not be enough work for the casual sort of, part-time job. But also if the other person loses their job, then you've got no income and you've got a 90% mortgage on a house and land package. And so in that situation, you get 3 to 6 months. But if things don't improve for you financially, you might have to sell. And then you've got this kind of flooding of house and land packages on the market. So I am really concerned about those kind of outer fringes. Together with kind of that high-rise market.
And of course, the mortgage stress is very high based on our surveys. So we already know that the financial profile of many of those households are already troublesome. So it's not looking good there. And I guess commercial property is another area because, a lot of retailers are closing down. They were closing down anyway. Now they're shutting their shops. You wonder how many of these, malls and other commercial, contexts for retail are going to survive as well.
Yeah, Flight Centre, Michael Hill, I think it was this week. DJs, who knows how long that's got left. There's a lot of, that's all your big end, but then it's also just the ones on the street, the cafes, the hairdressers, a lot of them are running month to month. Most businesses are running like personal households. What comes in each month they spend and whatever's left over they use to just live. Not many small businesses are killing it, putting their profits to the side and banking it. And 3-6 months of very little customers, even if you get, delays on your mortgage, your business loan, etc. I just don't think many businesses will survive on that retail front. There's been a lot of property spruikers out there that, been pushing that commercial property. You can get great yields. Why go residential? And I don't think a lot of those people really understood how a commercial property can potentially be so risky in terms of, your tenant, your rent's never guaranteed, and you might have a 3-year lease, but if that business goes bankrupt, good luck chasing that money and then trying to release it out. So I think commercial properties going to have its day a little bit just because of how many businesses are going to go under.
Yeah, well, I see that in the SME surveys that we run. More than half of the SMEs that I've looked at the last week said they had cash flow issues immediately, thanks to the slowdown and the shutdown. So it's going to be a bit of a mess, I think. But
Yeah,
I guess
think grand thing's a bit of a, the small business, benefits they're going to give is, the PAYG back in BASs. That's great for the government because if you keep your staff employed, then you keep paying them wages. That stops them having to apply for, social security benefits, etc., and Newstart and etc. So, the government's very incentivized to keep these people employment, and they don't get any, PAYG tax for them, or up to 100,000. But I don't think they're doing that much for small businesses. Really, it's potentially just subsidising wages a little bit, so they don't have to pay them. Yeah.
I have to say I agree with you, and of course, in many cases, there's no guarantee that the subsidies will get flowing through to the employees, right? Because there's no moral, maybe moral, but no legal obligation. So again, it's pretty complicated. But what about the areas that might do well? Are there any areas that you think, well, this might be an opportunity?
Yeah, there are areas in Australia where not all property has debt on it, right? So, maybe a third of property do. In some areas, a lot more properties than a third actually are debt-free. And then if you look at the composition of that suburb, say there's 100 properties, so 30 properties are debt-free. They might be owned by retirees, might be old money, etc. 30% of the properties have got very low debt to LVR. And, in those areas, payment holidays, if you are hitting troubles, maybe there's two incomes. So if one person loses their job, there's another person working. Maybe there's other assets they can do, have investments that they can sell to support them. So, if they do find troubles, they can sell an investment property to help them pay off their home. So there are areas where, the marginal buyer, and that's properties only priced on what properties are selling in that suburb, how many, and how many buyers really want to buy in that suburb. It's not 100 properties are in the suburb, 100 properties are on the market. It's only 3 or 4 of those that are on the market. And so I do think there'll be suburbs where there already is very low supply, and if anything, supply will completely fall off a cliff. So while there'll be a completely decline in demand potentially because of unemployment and things like that, there will be a complete reduction in supply. So generally, these are going to be the owner-occupier markets, kind of in the inner ring, which have got much more kind of established families with lots of equity. And those are the areas that will probably potentially bounce back as well when we're through this kind of, whatever it is, right? Because once we get out of it, rates are still going to be at 2.2%, and there's still going to be, 90% of people employed, let's say, and they're the areas that they're going to want to buy in as well. So there are pockets where the demand and supply things still will match up, and you won't get this influx of supply.
Now, that's very interesting. And what I've said consistently to people is, 1, don't panic. 2, if you are in difficulty with your mortgage, then talk to your bank. They do have obligations to assist. And the third thing is that, this may not be for very long. It might be for long. We're not sure. So effectively, there's going to be some unknowns on this. I guess the worst case, my bottom line is I still think property prices are likely to fall in the short term. How far and how deep and for how long is just unknown, because it's linked to how deep the turn-off is and then how long it is before we can start the economy off again. I guess also if you compare property, though, with other asset classes, in a way there are some characteristics of property which still makes it relatively attractive, isn't it?
Yeah, so I agree with you. I do think property prices are going to be, with a recession, if you see unemployment doubling, which is probably likely to happen, let's say, even just with casual employment, let alone full-time, part-time, underemployment, etc., people going 4 days, not 5 days, like there's definitely a huge reduction in employment. and then in tourism. And so you think about, say, Tasmania, right? It's had its day in the property market, Hobart, because a lot of it's been driven off overseas tourists and the economy doing so well over there from that. That's no longer exists, right? So, there's going to be parts of the overall property market around the country, I think, are going to get hit really hard. But you think, though, the reason the property market doesn't fall as much as, say, the share market in, 40% in a month, which is just crazy. A lot of it does come to the transaction costs, and it is driven by owner occupiers. Some, 70, 80% of people, they still need somewhere to live. So they do everything they can not to sell, even if the asset price falls. And so that's kind of one of the things that will really protect it. And what you'll also see is that, there is a lot of wealth out there. And if they see that there's anywhere they're not confident to put it, when there's a flight to safety, let's say, yes, they will go back into stocks when stocks start crashing even further. But a lot of them do see kind of that inner ring of kind of global cities as a safe haven. And there'll be a lot of wealth around the world. They'll be going, where can I put this? And that does support property prices in the kind of the inner ring of the cities. Like, for example, London in the GFC, the inner ring of London still held its value, but the whole of the UK got absolutely hammered. So, I do think that'll happen as well.
Yeah, you're right. It's going to be varying, I think, in different locations, different types of property, and as you say, different motivations. I guess the international aspect will be, when the international opens again, because a lot of people, of course, can't move internationally at the moment. But, of course, money can. So even though people physically can't move, perhaps the money will flow around the place. Here we are at the end of March. In a year's time, where do you think we're going to be?
So I think recessions go a lot harder and deeper than people expect. And so, even if this does turn around on a best case scenario that, we flatten the curve or whatever you want to say, over the next, say, 6 weeks, and cases stop exploding and we do what, China potentially has done, if that's what's happened there, then you've got what's that, May, June, and then things potentially start to turn to normality in, say, July, etc. Jobs just don't come back, and businesses just won't come back. So I do think it's going to take a long time for speed to kind of pick up again, confidence to return, the mentality to shift again. And so, I think overall, the demand's going to get really hit. I do think, though, that, because of low interest rates and because of banks' relaxed lending policy, there's still a lot of pent-up demand in property. There's still a lot of people who've got apartments that wish they own houses. There's still a lot of people who are first home buyers that do want to enter the market. A lot of your listeners here would probably want property prices to fall. Why would they want them to fall? So they can buy, And so there's a lot of people who want to get into the market. And so when confidence gets back and normality returns, you will have that pent-up demand that will support prices. But the problem is prices will only rise if there's a supply shortage. And so the only areas that will go up, I think, will be areas where there is constraints on the supply hitting the market. Whereas areas, for example, like holiday areas and tourism areas, house and land packages, high rise, even if there's more demand, there's more supply. So, it's.
Well, Chris, as always, I really appreciate your insights, and I think it's worth underscoring to people that you can't just talk about the property market in generic terms, right? You've got to look at specific areas, specific types of property, specific types of buyers and sellers, because the generic averages and generic indices don't tell you anything. So you have to get really granular.
Yeah, exactly. And that's when you're thinking about your property decisions, you really have to think about yourself and your family and what you want and where you want to buy and where you want to live long term. And what properties you've got and how does that play into it? Because the global story or what you read in the AFR or Australian or Daily Telegraph, whatever your listeners want to read, you've got to be really careful because that might not line up to the story for your property and what you want to do. And so, I guess it's just for everyone's situation, they've really got to dial it back to how does it actually impact them and where they want to go.
Yeah, great advice, Chris. Well, keep safe. Thank you very much for your time today. And we'll catch up again down the track and see where we go then.
Yeah, exactly.
Okay, take care.